Yesterday, we had some massive gains, all kind of falling on the coattails of these banks that are struggling.
Hello and welcome to another week of Mortgage Minute. My name is Matt Thomas. I'm here with Brian Dewald. We are here because headlines tend to do more to terrify than clarify, right? And so instead of letting the news scare you with the clickbait, we would like for you to tune in to watch real-time information, tips, and advice. And this week we have some very interesting news. Brian, why don't you go ahead and introduce yourself a little bit further, and then we'll take it from there. You've got some interesting things to share with us.
Thanks, Matt. Yeah, I'll jump into those real quick before we get into that. So Brian here, Brian Dewald. I'm at Fairway Independent Mortgage Corporation, local lender for the last 20-ish years, and kind of finally some exciting news to share with you, I hope. So
depends on who you are, but yes. If you're a home buyer, yes.
Yeah, all of the above. So today's Tuesday, March 14th. Yesterday, we had some massive gains, all kind of falling on the coattails of these banks that are struggling. So, SVP was Silicon Valley Bank, forced to shut their doors. Never really good news, financially or globally or anything like that. But a lot of times when things like that happen, investors really start pulling back and investing in bonds, which was good for us yesterday. So we had, at one point yesterday, mortgage prices were 122 basis points better, which is a giant leap. I'm going to do a quick screen share here with you and show you a couple of charts. So a little bumpy start here. We're down 36 basis points so far today, but here's what I wanted to show you. So this was over the last 30 days. And when this chart starts to go up or green, things are getting better. So back here at the beginning of February, February's a little bumpy. We're going down, which is increasing rates. This is Thursday's reading, March 9th. And then Monday, it jumped from here to here. You can see kind of across the board in the last 30 days, there's not been that big of a jump in quite a while. So,
wow.
Like I said, good news for mortgage rates. We tailed off a little bit at the end of the day, but, just riding on the coattails of bad news is traditionally when we see mortgage rates improve. So certainly saw that yesterday, and, hopefully that's a sign of things to come. And, kind of excited about that. I'm going to turn off the share here. Looking forward, the CPI was released this morning, right on par with what everybody had expected as far as the data goes, which is not really good or bad for mortgage rates. Like I said, we're off just a little bit this morning from a daily price standpoint, and a reminder that mortgage rates are traded every day, and they're, we see a different price every day, kind of like stock prices are always up and down a little bit. Looking to the future a little bit, we're hoping that as we get into, the middle of spring, particularly early May, is when we're going to see April's report. Now, the reason that date is going to be important is that the housing numbers finally catch up a little bit. There's a serious lag when it comes to the housing data and how it's calculated into CPI, which is really goofy because it holds so much weight when it comes to CPI. Housing, which is shelter, rents, home prices, all of these things, account for 43% of core inflation. But it's so far delayed, it really kind of skews things oddly. So anyway, we're hoping that by the time all of those positive forces collide in April, that come the first part of May, we're going to see some serious price movement from a mortgage rate standpoint, which would be great.
Yeah, that would be great. Absolutely. Well, and obviously nobody wants to see banks fail. Some would say maybe these things have to at some point for things to be healthier. But I know I've got some real estate agent friends that are in the Bay Area, and when Silicon Valley Bank fails, there's a lot of people with a lot of money invested in that bank in particular, being the 16th largest bank in our country. So it has some, that bad news definitely has some ripple effect. If you're here locally, not invested in that bank, and you are looking to buy a home, rates have drastically improved, and that's great. And then, as you're talking about, I don't know if the word would be organic, but you're talking about some improvement based on just some better numbers in the economy overall, and that would be tremendous to see. That would be not on the coattails of bank failures or any terrible type of news. So that'd be great. Brian, I know a lot of, sorry, go ahead.
I was just going to say that's all I had for up to the minute news. I just wanted to make sure I could share it with you this week.
Yeah, I wanted to ask you real quick about, there's been some speculation, certainly before the last few days in the news of the last few days, we saw that the Fed people were predicting that they were going to raise interest rates by 0.25%, possibly as much as 0.5%. And then with this bank failure, now people are speculating that may not happen at all.
The way that the Fed has reacted, they've raised 450 basis points in less than a year, right? It's going to cause some trauma. This shouldn't be a shock to anybody, right? There's a relationship between now, the way SVP was doing things was maybe a little differently than most banks, which is fine. But if the Fed hadn't done what they'd done, then they wouldn't be in this position, right? They were banking on. Now, they could have made better decisions, don't get me wrong, but the action of the Fed has really put them in a bad spot.
Right. Well, and obviously the Fed has made no qualms about, that they were hoping for a soft landing, but that there would ultimately be pain. Remember that word. They said there would be pain. Here's some pain. There's no doubt about that. But there are a lot of people certainly calling into question now the way that the Fed is going about this. Well, I don't think there's anything that would tell us that they're not committed to quelling inflation, but they may have to take a break from going at it so aggressively because otherwise we're likely to see other situations like this happen. And you have to be careful that it doesn't create a cascading effect. They actually, kind of had some specialized banking practices. So they definitely handled more risky businesses by nature. So anyway, we just don't want to see that spilling into the rest of the banking world. So hopefully the Fed I'm sure they're taking note, and hopefully this means that they'll maybe slow the way that they're raising interest rates for everybody to maybe not cause catastrophic failures. Brian, obviously it's our job to, myself as a real estate agent, you as a mortgage lender, that we are here to educate people on what's going on, keep you apprised of what's going on in the market, and help you ultimately to be able to find homes. And with this good news, with the drop in interest rates, there may be newfound opportunity, whereas the last month sort of erased some of the gains that we saw at the beginning of part of the year. And we're very likely to continue to see a roller coaster throughout the year. So if anybody's waiting on the sidelines, hanging out, waiting for this news, things just dropped tremendously. And I think that's great for prospective home buyers. So other activity going on this week in financials, we will update you next week. And I guess until then, Brian, did you have anything else?
I think that covers us for now.
All right. Well, we will look to chat with everybody next week.
Sounds like a plan. See ya.